When SpaceX went public at $135 a share, the stock immediately shot past $225 on pure hype. But then reality hit hard. The stock went down to $108 because investors stopped listening to futuristic space stories and started asking the real questions. Is all this spending actually making sense? That exact reality is now hitting the entire Mac 7. Big tech quarterly earnings are in, and the numbers reveal a clear split. Who's making money on AI and who's burning cash on capital expenditure? The cloud giant Amazon crushed expectations with AWS jumping 37% to $42 billion. Microsoft Azure surpassed a historic $100 billion run rate with EPS surging 32%. Alphabet delivered a huge beat with Google Cloud accelerated to an 82% year-over-year growth. Meanwhile, Apple proved hardware is back with iPhone sales popping 20.5%. The biggest twist is Meta's revenue grew by 28%, but EPS dropped 13% as quarterly capital expenditure passed $31 billion. And Tesla missed estimates as auto pricing cuts compressed gross margin to 14%. Nvidia remains the hardware powerhouse with 85% top-line growth. It all comes down to one word: capital expenditure legibility. What happens to these stocks? Microsoft surged 12% because Azure demand exceeded supply. Amazon jumped 10% as AWS growth hit 37%. But Meta stock fell by nearly 10% and Apple fell 5%. The lesson learned? Wall Street is done paying for promises. Over $145 billion was spent this quarter. The market is aggressively rewarding companies turning AI capital expenditure into real revenue today and punishing unhedged spenders. Subscribe to CrispIdea Research today to access our complete coverage universe, financial models, and equity recommendations. Thank you.